This video is a review of Kawasaki Heavy Industries' financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. Kawasaki Heavy Industries is a major Japanese manufacturer of ships, trains, motorcycles, aerospace and defense equipment, and industrial machinery. Its main competitors are Mitsubishi Heavy Industries, a leader in defense and aerospace, and IHI, strong in energy and industrial machinery. Recently, Kawasaki Heavy Industries has been attracting attention as one of the so-called KWHIY stocks and also Koizumi stocks. This term refers to companies that could benefit from expectations surrounding the next prime minister. Since Kawasaki Heavy Industries is a core player in Japan's defense industry, both leading candidates Sanae Takaichi and Shinjiro Koizumi regard domestic defense as an important policy. Business profit in the first quarter reached 20.5 billion yen, which is 3.5 billion yen higher than the same period last year. This amount represents 14% progress of the full-year forecast of 145 billion yen. Stronger start than last year's 12% progress at the same point. The effect of U.S. tariff policy in the first quarter was limited. However, the full-year forecast for FY2025 already includes the expected impact of tariffs, along with indirect effects considered in the company's planning since the beginning of the fiscal year. Although higher tariffs have increased costs, Kawasaki Heavy Industries has kept its full-year business profit forecast of 145 billion yen unchanged. From the second quarter onward, the assumed exchange rate has been revised to 145 yen per US dollar, compared to 140 yen previously. Progress rate is quite low, but according to Kawasaki Heavy Industries, the progress for the first quarter appears to be in line with the plan. Also, the annual forecast remains unchanged, but since the exchange rate has moved from 140 yen to 145 yen, there is a possibility of annual profit decline if the yen strengthens than the projection. In the first quarter, both revenue and business profit increased compared to the previous year, and revenue reached a record high for a first quarter. However, profit before tax and net profit declined significantly by 72% year-on-year. This was mainly due to smaller foreign exchange gains, which resulted from the appreciation of the yen. Kawasaki Heavy Industries is divided into 5 segments: aerospace systems, rolling stock, energy solution and marine engineering, precision machinery and robot, and power sports and engine. Aerospace systems segment develops and manufactures aircraft, jet engines, helicopters, and defense systems. Supplies both commercial and military markets. Rolling stock segment designs and builds trains including Shinkansen bullet trains, subway cars, and urban transit systems. Energy solution and marine engineering segment provides power generation systems, gas turbines, industrial plants, LNG carriers, and builds ships including submarines. Precision machinery and robot segment produces hydraulic equipment, industrial robots, and automated systems for factories and construction. Power sports and engine segment makes Kawasaki motorcycles, utility vehicles, personal watercraft, and general-purpose engines. Kawasaki Heavy Industries' defense-related business is primarily part of the aerospace systems segment, which includes military helicopters, fixed-wing aircraft, and defense-related aircraft components, forming the core of their defense industry operations. In the first quarter, business profit in rolling stock rose due to higher profitability, recovery from last year, and because assigning less shared cost to the segment increased its reported profit. Business profit in aerospace systems declined because of a temporary drop and higher shipments of newly manufactured commercial aircraft engines, which increased costs. Demand and profitability in the Ministry of Defense business are expected to grow due to Japan's defense reinforcement policy. Kawasaki Heavy Industries is strengthening its activities related to the defense business, focusing on 7 key areas to enhance defense capabilities. These areas include integrated air and missile defense, standoff defense capabilities, cross-domain operations, command and control and intelligence functions, mobile deployment capabilities, sustainability and resiliency, and unmanned defense capabilities. The forecasts for FY2025 take into account the expected impact of U.S. tariff policy. From the second quarter onward, the assumed foreign exchange rate has been revised to 145 yen per US dollar. The full-year profit forecast remains unchanged from the May projection, but the annual net profit of 82 billion yen represents a 6.8% decrease from last year. Kawasaki Heavy Industries maintains a medium to long-term consolidated dividend payout ratio target of 30%. For FY 2025, the company plans to maintain a stable annual dividend of 150 yen per share, which corresponds to a dividend payout ratio of 3.7%. Annual earnings per share are forecasted to decrease by 6.6%, but since the dividend remains unchanged, that was good news for shareholders. Kawasaki Heavy Industries has faced two major scandals. First, a slush fund was created through fictitious transactions in naval vessel repairs, leading to the provision of goods to Maritime Self-Defense Force members and disciplinary action against 93 personnel. Second, irregularities were found in fuel efficiency tests for submarine engines, with an independent investigation committee set to issue a report by the end of the year. In short, the company is under scrutiny for both financial misconduct and testing irregularities, with the Ministry of Defense and outside investigators pushing for corrective measures. The company is under improvement about these matters, but the fact that these issues occurred remains a concern. Stock price. This chart over the past year shows the stock price in Japanese yen at 9,513 as of September 22nd. This chart shows the stock price in US dollars at 26.53 as of September 22. Kawasaki Heavy Industries' stock price had been sluggish, but recently it has shown a strong upward trend similar to other Japanese stocks. Current PBR is 2.16 and PER is 19.4. Dividend yield is 1.58%. Compared with past PBR, PER, and dividend yield, the current stock price appears slightly undervalued in terms of PR and dividend yield, because earnings per share and dividends have increased significantly. However, the stock is relatively high in terms of PBR because the stock price has risen faster than the growth in assets. Conclusion. In the first quarter, Kawasaki Heavy Industries recorded a record high revenue, but profit declined significantly due to a stronger yen. The company remains a core player in Japan's defense industry, benefiting from policy support under potential new leadership and strengthening key defense capabilities. Concerns remain due to past financial misconduct and testing irregularities. Overall, Kawasaki is on a path of operational recovery and strategic growth, but investors should remain aware of external risks such as tariffs and currency fluctuations.